So today we're going to talk about the Atlanta market.
Just a quick introduction about Doorvest. We currently operate in 7 markets and we're continuing to grow. We're in Oklahoma City, Oklahoma, Houston, San Antonio, and Dallas, Texas, Columbus and Cincinnati, Ohio, and of course, Atlanta, Georgia. So, just a little bit about Atlanta, right? Um, when we're looking in general at the markets that we go into, we're looking at key factors in terms of population, economic growth, and the inventory levels. Our acquisitions team is looking at dozens of other criterias, but I would say these are the few key metrics that we look at when expanding into the markets. In terms of population growth for Atlanta, Atlanta is one of the largest US cities, and it's not news to us that we see it's grown 5% since 2019, so during the time of the pandemic, and 9x since the 1950s. The migration patterns is something that a lot of investors have been looking at recently, especially with the work from home environment. It's not news to me that Atlanta is one of the top cities where people are moving into, and it's coined as the land of opportunity. And I really love that because unlike some of the other cities that we're seeing a lot of young adults move into, such as Austin, New York, Miami, Atlanta is unique in the sense that we have lots of families moving here, young adults moving here for two key reasons, and that is due to lower cost of housing, and the second is access to higher education. And you'll see as we go into more of the stats here that 90% of the folks living in Atlanta have a have a high school degree or higher. And there's lots of universities in the area and a growing tech hub, all showing that Atlanta is a land of opportunity for folks looking to maybe get into that higher education and looking for opportunities in tech and other fields. So Atlanta is the fifth largest, um, sorry, has the eighth largest MSA. So they're just trailing behind Los Angeles, New York, and Chicago. And they're actually projected to climb the ranks from number 8 by 2050. And so when we talk about MSA, it's everything in this like yellow, red, and orange area. And that green is Atlanta City. So Atlanta City itself is number 39 of all cities in the US in terms of most populous. In terms of economic growth, so we look at a few things when it comes to economic growth. For me, it's important to see what the job opportunities look like out in the market, as well as the government investment into the economy there. So major tech companies, Google, Apple, Microsoft, has all identified Atlanta as a growing market to attract top talent. So Google actually had a $530 million investment into a campus in Midtown Atlanta. It's already open. Apple and Microsoft are either has already opened an office or is opening it real soon in Atlanta. But outside of just tech growing in Atlanta, we have I think it's like the fifth largest city with the top Fortune 500 companies. So companies like the Home Depot and Coca-Cola have headquarters in Atlanta. So again, a great mix of tech, but also other industries as well. And what's super interesting and exciting to see as well is the entrepreneurial environment in Atlanta. We have dozens of startups that have were founded in Atlanta, reaching over 1 billion. And one company is Calendly, which we use to help with our scheduling. And then lastly, I really like to look at what is the investment going to look like from a government perspective. So government tend to look at plans 5, 10 years out. And Atlanta approved a $460 million plan into transportation and then 160 million into parks and recreation. They are investing in the quality of life for people who are migrating into Atlanta, but also for the folks that are local to Atlanta. Of course, with more and more people moving into Atlanta, um, it's important that retention remains strong, but also for new folks and for people who are local. So that's super exciting. This means that people were going to be able to get around more quickly, easier with transportation investment. There's lots of people commuting maybe 20-30 minutes into the city or into where their work is. So this is going to help a lot in terms of continuing to grow Atlanta and putting them on the map as a big city. Okay, so we're going to go into the renters market and what the home prices currently look like. So for the renters market, about 45% of homes are owner occupied in Atlanta. We really like this. Why? Because it's not oversaturated yet with rentals. The second piece is, let's think 5, 10, 20 years. If an investor is looking to sell their home, they have a diversified set of buyers. So you have owners, uh, maybe people are looking to buy their primary home. If you're looking to continue to hold on to it, then you know that you can continue to attract renters. So generally, we really like this. In terms of vacancy rate, the US average is 5.8%, but Atlanta's is 5.4%, which is stronger than the US average. And for a big city, that's amazing. The rental prices is on average around 1940, and we're seeing that as well on the Doorvest side. And then going into home prices, the general median price right now is 350K. Again, speaking to the affordability that we see in the market and why it's such an attractive place for people to migrate into. And inventory levels, it has been tight, but it's at sitting around 4 months. On average, we want to see 6 months of supply to match the demand, but 4 months is not so bad. And then speaking in terms of Doorvest, our current median price on our platform is $287,000. So it's a little bit even more affordable. Next up, I want to share the spotlight on some of the homes that we have available. So today, I'm going to highlight 2 properties in Atlanta for y'all. So starting with 6255 Creekford Lane. So this home is in Lithonia, Georgia. It's right outside Atlanta, and it's a 4-bedroom, 2.5 bath, built in 1986 with an expected rent of 1875. So let's go into the photos really quickly, and I'll show what these renovation photos currently look like. So right now, it looks like it has a converted garage. It's a white house with black trims, updated flooring, and recessed lighting throughout the home. Um, and yeah, and updated bathroom fixtures. You'll see with a lot of Atlanta homes that it typically backs into almost like the woods, lots of trees in the backyard. So this is common in Atlanta. We're seeing new toilets and new fixtures throughout this property. Overall, yeah, updated restrooms with new tiling, new tub as well. So this home looks brand new and looking really good in general. Let's look at the kitchen really quickly. New kitchen, new appliances, and we have a granite counter. This is really good material for renters because it is long lasting and high quality. All right. And we're going to go back to the home profile. So as an investor, what you're looking at is lots of these highlights that we have here in the home profile. So in year 1, you can expect a 7.36% cash on cash return with $408 in monthly cash flow. Investors typically either choose between 20 to 25% down if they're going through a conventional mortgage. And of course, that's up to you and your lender to figure out what is the most comfortable range. This home is priced at $246,000. And again, speaks to the affordability, right? On average, the home's median price in Atlanta is $350,000. So this is definitely in the more affordable range. In down below, you'll see a 5-year, 10-year return. In 5 years, this home, you can expect to generate $106,000 in total returns. And this includes cash flow, appreciation, and equity, and does not include any tax savings and benefits that you can incur while you're owning this investment property. So if you think about it, from a $62,000 down payment, uh, over the long term of 5 years, cash flow, appreciation, and equity all added up, you can generate 106,000, which is almost 3x in terms of your return on investment. So that's pretty awesome. All right, so this home has a few perks that I'll go through. So, in order to kind of align our investors, we added a few perks. One is DV Boost, which is where Doorvest will pay you $300 per month for the first year and $150 per month in the second year. And I'll go in detail on like what DV Boost looks like compared to our second perk, which is points pay down. So you can choose either one or the other, and they have different goals. For points pay down, Doorvest will pay to reduce the mortgage interest rate. I think we've all heard what the interest rate environment currently looks like. And in order to help kind of combat that, we want to help our investors by paying down the interest points on that. So this is another option that you can choose as you're evaluating the property. We also reduced the service fee on this home. Generally, our prices are around 10% for property management fee, but for this home in particular, it's 3% for year one. All right, so when all is said and done, if you were to choose DV Boost, you'll incur a $400 monthly cash flow in year one. Okay. And some of the things that we also include is our renovation guarantee, our rent guarantee, and the price that you see here is locked. We actually don't do any type of bidding wars. Once you reserve this home, it's yours as we kind of go through and help you navigate the purchase of the home. Cool. And one last thing is on the neighborhood. It's with our partners. This home is graded a B minus, great for families, and outdoor activities and young professionals. So overall, a really strong neighborhood rating. Into 6818 Charles Drive. This is another Atlanta property. This one's located in Morrow, Georgia. So again, earlier I talked about the different MSAs and the different suburbs. So let's just jump into the neighborhood really quick. Lithonia is right here. That was the 6255 Creekford Lane. And then Charles is here. Okay, jumping back up. This home is a 3-bedroom, 2-bath. It's currently leased already at this 1770 rent range. So that's pretty impressive. Let's take a look at the photos. As you can tell, again, this home is backed against the woods. And I told you that was a very common thing in Atlanta, right? A really standard home with less updated restrooms. The original tiles are still in, but new toilets, new sink, new flooring throughout the home as well. Similarly, we have that same type of style in terms of the kitchen, fully updated with new appliances and granite countertops. For this home, you can expect a 5.5% cash-on-cash return, 7.5% cap rate with $344 in monthly cash flow. For the total returns, again, I love looking at this because it really makes you think about the whole picture when you're investing in an investment property. It's not solely about cash flow and these other factors that people tend to look very closely at, but you also want to look at what your cash flow will look like in the future, combined with appreciation, combined with equity. So for this home, around 110K in total returns by year 5. Again, that's like a 3x return on your investment from the $69,000. And you got to remember, when you have that equity that's being built in this home, it's mostly paid for by the residents as well. So no additional cost to you over time in terms of that built up equity that you see. Okay, and this home went through a pretty extensive renovation. Some things that we didn't see in those pictures were like an updated HVAC, which tend to cost anywhere from $7,000 to $10,000 for a new HVAC. Similarly, we also added the perks that you saw on 6255 Creekford Lane is also here on 6818 Charles Drive. So we have DV Boost or points pay down. We also have a reduced management fee from 10% to 3% on this home. It's already rented at 1770, so that was our higher rent range. And when all is said and done in terms of our perks, you can expect a $344 monthly cash flow. Cool. And again, the neighborhood score is a B. It's great for families, young professionals, diversity, with strong schools as well, 5, 4, and 8. Let's go into the renovations really quickly. This home went through $53,000 worth of renovations. That includes the new HVAC, the new flooring we saw earlier, new granite countertops and kitchen appliances, and the list goes on. And this is already baked into the price. So again, this price is $276,000, and it includes the renovations that were already completed in this home. So I talked a lot about some of the perks that we included, but I didn't get to dive too deep into the differences between DV Boost and points paydown. So I wanted to share quickly on why you may want to choose one over the other. And this is all unique to your preferences. And of course, reach out to your client partner if you have any questions, and they can help walk you through it even further. So for DV Boost, if you were to choose the Rocket, it's to help you increase cash flow. We're paying $300 per month for year one and $150 per month in year two at no cost to you. And this is great for folks who are looking to generate that cash flow in the short term, especially when buying homes in like a highly desirable area, such as the two homes that I just showed you. But typically, homes in highly desirable areas don't cash flow immediately. And this is why we introduced DV Boost. For points pay down, it's more of a long-term play. So in this case, we are looking to decrease your mortgage rate, and this duration is for the lifetime of the loan. This will be also paid by Doorvest at no cost to you. This is great for people who are looking more long-term. You lock down a lower interest rate for the lifetime of the loan, and instead of waiting around anxiously waiting for that opportunity to refinance the home, you know that you are able to have a bit of a lower interest rate now. Granted, the opportunity to refinance when it comes, and if it makes sense for you, you can still do that. Thank you so much for your time today, and I hope you learned something new about Atlanta. The recording will be sent out after this as well, and so I'll share any of the resources that really help. Thank you again for your time today.